Social Security tax calculations. Marital filing status does not matter with Social Security tax. Social Security tax is capped at an individual income of $176,100 per year. That's effective in 2025. Scenario 1. The person is making less than $176,100 a year. They are an hourly wage earner and paid weekly. V makes $38.50 per hour and worked 52 hours that week. We'll assume overtime hours remain constant for the year. First of all, we'll calculate gross pay like we have many times before. Regular pay, $38.50 times 40 hours equals this. Overtime pay is $38.50 times 1.5 premium pay times 12 hours of overtime yields this. Gross pay is adding these two together. 2, we must check to see how much V will make in a year to see if V exceeds $176,100 a year. Gross pay per week, $22.33 times 52 weeks yields $116,116. Since making less than $176,100, we use the full 6.2% for the entire amount. So calculating Social Security tax for that week, we take the $22.33 times the 6.2%, which yields $138.45 in Social Security tax for that week. Scenario 2, person making less than $176,100 a year. They are salaried exempt, paid monthly. Bo makes $157,300 a year and works 52 hours a week. Since salaried exempt, Bo does not receive overtime pay. Since annual salary is less than $176,100 a year, we're going to use 6.2% without capping it. So we'll calculate the monthly pay. $157,300 divided by 12 yields this number. Now we're going to calculate the Social Security tax for the pay period. So $13,108.33 times 6.2% yields $812.72 a month in Social Security tax. Scenario 3, person making less than $176,100 a year, salaried non-exempt, paid bi-weekly. JT makes $126,880 a year and works 50 hours each week. Since salaried non-exempt JT is eligible for overtime pay, we'll assume that overtime hours remain constant for the year. Since eligible for overtime, we have to convert the salary to an equivalent hourly wage. So $126,880 divided by the number of work hours in a year yields $61 of equivalent hourly wage. Now we're going to calculate the weekly pay. Regular pay is $61 times 40 hours, which is that. Overtime pay is 61 times 1.5 times the 10 hours above 40. And gross pay is adding those two together. Now we must check to see how much JT will make in a year to make sure it's not above $176,100. So gross pay per week times 52 weeks is 3,355 times 52, or 174,460, which is less than the 176,100. So we'll use the 6.2% Social Security tax without capping it. 3, calculate the SS tax for the 2-week period biweekly. So gross biweekly pay is $3,355 times 2 weeks equals that. And then we just apply the 6.2% to that number, which yields $416.02 in this tax. More Social Security tax calculations. Again, marital filing status does not matter with this tax. And this tax is capped at an individual income of $176,100 per year. In reality, employers would take Social Security tax out until cap is reached and then stop for the year, but we're doing it a little bit differently. Scenario 4, person making more than $176,100 per year. Salaried exempt, paid biweekly. Sammy makes $186,100 a year and works 58 hours each week. Since salaried exempt, Sammy does not receive overtime pay, so we're going to calculate how much Social Security tax for the year. Since making more than $176,100 a year, we cap the Social Security tax at $176,100. So the annual Social Security tax is $176,000 times 100 times 6.2%, or $10,918.20. If Sammy made $500,000 a year, this number would not change. If Sammy made $1 million a year, this number would not change. It's always capped at that amount if a person exceeds it. To calculate the Social Security tax for the pay period, if paid weekly, we're going to divide by 52 weeks. If biweekly, then 26. So we're going to take this number, which is the annual Social Security tax, divided by 26 pay periods, or $419.93. Again, notice that we do not tax on the $10,000 above the $176,100. Scenario 5, person making more than $176,100. They are salaried, non-exempt, and paid weekly. Blue makes $139,360 a year and works 51 hours a week. Since salaried, non-exempt, Blue is eligible for overtime pay. We'll assume overtime hours remain constant for the year. Since eligible for overtime, we have to convert the salary to an equivalent hourly wage, so $139,360 divided by the number of work hours in a year equates to $67 an hour in equivalent hourly wage. We calculate the weekly pay. So the regular pay is $67 an hour times 40 hours yields that number. Overtime pay, 67 times the 1.5 pay premium times 11 hours above 40 hours. We come up with that. We add the two together. Now what we must do is must check to see how much Blue will make in a year to see if Blue exceeds the $176,100. So $37.8550 times 52 weeks yields this number. Since making more than $176,100, we use 6.2% tax on only $176,100. It caps at that. Calculate how much Social Security tax for the year. Annual Social Security tax is $176,100 times 6.2%, which is this number, which is exactly the same as that number because it's capped at $176,100 in income. Calculate the Social Security tax for the pay period. Since we are looking at someone who's paid every week, we take the $10,918.20 divided by 52 to arrive at $209.97. Again, the employer is likely to take the Social Security tax out until the cap is reached and then stop for the year. They would not break it into per pay period. Why? This is in case the employee's income changes during the year, maybe less overtime, or the employee leaves.